Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Oil jumps as the US sanctions Russia's two biggest producers. The Trump administration says Moscow is not serious about ending the war in Ukraine. And Asian stocks fall after a volatile session on Wall Street, and gold extends declines as the momentum trade unwinds further. Plus, Tesla's profit tumbles and SAP's revenue misses. We'll bring you third quarter earnings from Volvo Cars next. We've got a raft of earnings to bring you this morning, and we kick off the show with Nokia earnings. Third quarter net sales coming in at 4.83 billion euros. The estimate was for 4.63 billion euros. So a beat there for Nokia. The currency headwinds and US tariffs have been a bit of an obstacle when it comes to demand and profitability. And yet Nokia saying that they're tracking towards the midpoint when it comes to the operating profit outlook range. They see full year adjusted operating profit of 1.7 billion to 2.2 billion euros. The estimate had been for 1.8 billion euros. So really covering their bases. They're very much around the estimate, and the CEO saying that they're on track to achieve their full year outlook. Now, next we turn over to France for STMicro. Of course, it's especially exposed to tariff risks because it doesn't have a US manufacturing base despite their heavy reliance on US customers. They're saying they see full year gross margin of about 33.8%. The estimate had been for 33.9%, so very much in line there. When it comes to gross margin, 35% is what they have for the fourth quarter. The estimate was for 34.9%. Net revenue coming in at $3.19 billion. The estimate was for $3.17 billion. So, again, a beat there. Overall, they're seeing net revenue of $3.28 billion. Estimates were $3.35 billion. So a bit of a miss when it comes to fourth quarter net revenue. Now, I also want to look over at Volvo Cars, not trucks, in Sweden, of course. And the fact that the company is controlled by China's Geely means that Volvo Cars, again, is one of the more tariff-exposed passenger vehicle brands with US operations. They say that the US-EU tariff deal does offer much-needed clarity. They see the market to be increasingly challenging, though, and they have third quarter revenue at 86.4 billion Swedish krona. The estimate was for 83.4 billion Swedish krona. So quite a beat there, actually. Third quarter retail sales, though, dropping 7%. We're going to be speaking to the CEO, Håkan Samuelsson, of Volvo Cars CEO, in about 5 to 10 minutes. So really looking forward to that conversation. He, of course, was brought back in April by the Geely owner to turn the company around. So really looking forward to hearing how that is going. Next up, we go to pharma, and we're in Switzerland now with Roche. The shares up about 10% year to date. They have raised their 2025 core EPS outlook, going red across your terminal as we speak. And they're seeing an increase in group sales in the mid-single digit range, but core EPS in the high single to low double digit range. Their outlook, as I say, for 2025 earnings raised. They have pharma sales here just slightly missing estimates, in fact, but this the latest from Roche when it comes to pharma. And so really a raft of earnings this morning, the highlights at least when it comes to results in Europe this morning. But let's check in on how these broader markets are faring at the moment. We have futures pointing higher, actually, stateside. S&P E-minis up about 0.1%. Euro Stoxx 50 futures, though, as well as FTSE 100 futures, flat to the downside. We've had a choppy session on Wall Street yesterday after that Tesla earnings miss, and the sentiment seeming to continue into the Asia session. Traders also, of course, minding President Trump's trade threats on China. We'll dive into all of this throughout the programme. But not a lot of movement in either direction when it comes to the transatlantic futures picture so far. Now let's flip over to the cross-asset picture as well. We have the 10-year Treasury yield up a basis point at 3.95%. We had quite a strong 20-year auction yesterday, paving the way for a flatter curve into CPI tomorrow, the first meaningful data print, of course, in weeks. But euro-dollar currently weaker, a 1/10% at a 115 handle. Gold down for a third straight session. And again, we ask, has the rally run out of steam? It seems like the question on gold isn't where's the ceiling anymore, but where's the floor? So $4,090 a troy ounce is where we trade right now. But oil higher today at $64 a barrel after the US announced sanctions on Russia's biggest producers, ramping up the pressure on Putin to end the war in Ukraine. So let's take a closer look at those sanctions now. The US stepping up that pressure by targeting Russia's biggest oil producers, including Rosneft and Lukoil. This move really a U-turn for US President Donald Trump.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
Well, will they be worth the wait? Bloomberg's Balash Pence joins us now with more details, our new desk editor. Balash, we know that sanctions work slowly. We know they haven't much deterred Putin in the past. Is President Trump's aim simply to bring him to the negotiating table?
Well, he's trying to get Putin to budge, which he hasn't been able to do with his previous strategy, where he was holding off on sanctions. There were some threats sometimes. There were a lot of meetings, and as the president said, they had a lot of very nice conversations, and then seemingly nothing happened. Russia just went back to bombing Ukraine, even stepping up its assault on Ukraine. So now it took this very substantial step of targeting Russia's biggest oil companies, Rosneft and Lukoil, which together account for 50% of Russian oil exports, in the hopes of changing Russia's calculus on the war economy, really targeting Russia's revenue, the commodities revenue, which is so key to keep the Russian economy going. We know that the Russian economy has been under pressure, and now the question is whether this does change how the Kremlin sees the war. We know that just hours after the announcement, there was a phone call between Marco Rubio and Sergei Lavrov. So it does seem like the U.S. was able to get the Kremlin's attention. What was discussed in those calls, we don't know, and how far they are able to push the Kremlin in terms of coming back to the negotiating table. It also remains to be seen. But this is a step that goes further than anything before. This is a step that even the Biden administration was reluctant to take because of the potential impact on oil prices, as we see today. So this is potentially a change in strategy for the U.S.
OK, Bloomberg's news desk editor Balash Pence out of Hong Kong. We thank you so much for that detail. Now to some breaking news, and this is that Airbus, Leonardo and Thales have signed a memorandum of understanding for a space and satellite player. Now this is a story that had been speculated about earlier in the week. We had Leonardo's board meeting on Tuesday, but it looks like they have reached an agreement on this merger of their space businesses, as I say, to create a space and satellite player. So that story just breaking across the terminal. You can see the gains for all of those stocks so far this year. We'll keep an eye on those in particular at the open. But turning back to geopolitics now, President Donald Trump is ratcheting up pressure also on his Chinese counterpart, Xi Jinping, ahead of their expected meeting. Now, the US is considering export restrictions that would bar China from buying a swathe of critical software. Treasury Secretary Scott Bessent says that everything is on the table. Now, Winnie Xu joins us for more detail out of Hong Kong. And Winnie, I wonder how damaging these restrictions are going to be for China, potentially.
Yeah, morning. Interestingly, that we are seeing actually quite limited impact when it comes to the direct impact on China. When you look at just the markets, how the markets are doing today, you see that stocks in Hong Kong actually fluctuating with the CSI 300 slightly to the downside. And it is really how people are seeing this more of a negotiation tactic ahead of the potential meeting between Trump and Xi. And actually, we are seeing, interestingly, that these software stocks in China, we see two examples on the screen here, both in the green. So that's really also showing how investors see that there are more positioning into these domestic alternatives and expecting more adoptions there. So we take a kind of zooming out and looking at how the broader Asian market is trading here today. Still under a bit of a pressure. It is that ongoing tension between U.S. and China, but also the global unwinding of momentum playing out here. And interestingly, we are seeing actually Indian stocks up slightly. It's a bit of a catch up from a holiday yesterday, but also sentiment still capped because Prime Minister Modi actually said that he will not be attending the ASEAN summit, which also means that he might not be meeting Donald Trump. Now, let's take a look at what's going on in Japanese market, because the Nikkei 225 is actually the biggest drag here in the region today, with the benchmark down more than 8%. So it's still a bit of that profit taking from the Takaichi trade, and also the yen is down, is weakening for a fifth session.
All right, Winnie Xu out of Hong Kong, we thank you so much. And just continuing that theme on momentum, equities sliding on Wall Street in trading yesterday. Perhaps a sign that earnings season isn't going quite so well for everybody. We can get detail now from Bloomberg's Valerie Teitel. And Val, as we just heard from Winnie, momentum seems to be unwinding.
Well, it could be, Lizzie, that we've just gotten some new information, and the lack of U.S. data. We are relying on earnings for a guide on how the U.S. economy is doing. And Netflix sinking 10% by the end of the session yesterday, I think just shows that the market is getting a bit more wary that this tech round of results next week might not be as stellar as we hope. So we did see a slide when it comes to NASDAQ futures by the end of the session yesterday, down around 1%. Now, some of that weakness was also added to by what Winnie was just talking there, the U.S. threatening software curbs on China, but also the continued fall in gold. This is another example of a momentum trade, a trade that's performed very well, seeing some decent profit taking ahead of that U.S. CPI report on Friday, and a busy, very busy week of monetary policy decisions next week. So gold continues its decline. It's down now for 3 days in a row, dropped 6% in that time frame. And Lizzie, we're eyeing that 4,000 level yet again. Now, there is some interesting things going on here with the gold market. We are starting to see ETF outflows. So that kind of momentum outflows out of ETFs is going to be hard to see gold rally without those inflows coming back. But I mentioned it has been maybe a weaker than expected earnings a week, at least for tech. We did have IBM out after hours yesterday. The shares sunk nearly 6.5% in post-market trade. Now, Lizzie, this one had to do with the fact that IBM's more AI-related cloud service unit called Red Hat saw a slowdown in sales growth. So there's some skepticism now on whether IBM is best able to capture the AI enthusiasm trade with that slowdown.
All right, Valerie Teitel, we thank you so much. And I want to stay with earnings because, as you say, Tesla's profit plunging as rising costs undercut a record quarter of vehicle sales. Shares dropped in extended trading, with analysts saying there's not much to inspire investors and questioning the timeline to develop new businesses like AI and robots. Now, despite the concerns, the chief executive Elon Musk ended the call by pleading with investors to ratify his upcoming $1 trillion pay package.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, Bloomberg Tech Asia anchor Annabelle Drewlers has more for us. Morning, Annabelle. Just talk to us about how much of Tesla's woes come back to Donald Trump's policies.
Yeah, well, actually, that's got quite a lot to do with it, really. I mean, in the numbers, we saw revenue coming in better than expected. Margin was better than expected as well for the latest period. But the big thing that really surprised investors to the downside was operating profit. And there was a 40% drop in that number. What is driving that, or what's behind that in large part, is the impact of US tariffs, what they're having on the business, because we saw them taking a $400 million hit in that period from those US extra duties alone. So it did have a big bearing on the business, and you really saw that underscored in that aftermarket trading activity because it slumped nearly 4%. And really as well underscored the concern that people have as well that Tesla isn't very clear on what are the near-term growth drivers and how they're planning to revive this EV business. But as you said, to your point, I mean, we heard it during the call as well. Elon Musk really making this pitch at the end that he needs this remuneration package, that $1 trillion pay package at the maximum if he meets the milestones approved. And he also wants to have a 25% stake, or at least a 25% stake in the business. So he has a say in the direction of the business as well.
All right, Bloomberg's Annabelle Drewlers, we thank you so much. Well, coming up on the programme, we're going to stay with earnings. Volvo Cars reporting a big beat on third quarter operating income, and I'll be speaking to the CEO next. Plus, could EU regulations kill Europe's gaming industry? We'll be speaking to the CEO of the company behind Candy Crush and Clash of Clans. They say that they're an existential threat. So that conversation coming up as well later in the show. Stay with us. This is Bloomberg. Volvo Cars' third quarter profit rose as the automaker benefited from the effects of its $1.9 billion cost-saving program. That's even as Volvo Cars' sales are down 8% this year through September. So to bring it all together, I'm pleased to welcome the automaker's CEO, Håkan Samuelsson, to the program. Good morning, Håkan. Thank you so much for making time for us. As I say, you've done well on profit here, but sales less rosy. Are you concerned about demand? How's your outlook change going forward?
Now I'm quite confident because we know really why we were down in sales. We had very high sales of our smallest electric car last year, and that was made in China, and then we need to move it to Europe and localize it in Belgium, and then we lost production capacity. But now we are back producing that car, so I'm not too nervous about the volume. I'm more concerned that we continue with our actions on profitability, coming back to a solid cash flow. That's my number one priorities.
Well, yeah, you hint at the fact that you're more exposed to US tariffs than many European rivals. You've moved some production already. Is there going to be more of that, more moving production?
Yes. I don't think you should call it moving production, but we will increase the utilization in the factory in Charleston. We need to introduce more cars, but they will be new cars, so they will not be moved from Europe. But we need to really utilize the factory to a much higher degree than we do today. And then that's really a very important part of our turnaround in America as well. We need to be industrially present. We need to be an American company in producing closer to our customers.
But of course you do have a Chinese owner, and I believe you're waiting for feedback from the US Commerce Department on whether you'll be allowed to sell future models into the US. Have you heard anything back yet from the Commerce Department?
Now, there is a constant dialogue with our legal expert and with the people in the department, and there is no urgency. I think this is for model year 27 or something, but there is a process going on, and I must say I'm not too nervous about that. We have been in the US for 70 years, and we will continue being present in the US.
Okay, not too nervous, but you're fully confident, are you, that the administration is going to grant you this exemption?
I think you can never be fully confident about anything these days, but that's not what keeps me awake in nights.
So what does keep you awake at night then, Håkan?
No, I'm too old for that, so I sleep rather well. I'm quite confident about the future of our company, and I'm really glad to be back. And I think with our result of 7.4, I think hopefully that is still a sign of a turnaround of the company. Maybe it's too early to say, but it's still very positive, combined with also positive signals on the sales side. September was the first month where we are back into growth.
Well, we've also been reading about how Europe's auto industry is exposed to chip disruptions potentially from China because of the new export restrictions on China-made semiconductors from Dutch chipmaker Nexperia. Has that affected Volvo Cars at all?
No, but not yet. but we are, of course, this will affect our suppliers. So it's not supplied directly to us, but we are monitoring this very closely. And I think this is almost coming back in time to the pandemic, where we had a similar situation. And I think we learned then to really be hands-on and really together with our suppliers looking into exactly how the supply of the ships are coming in. So we are monitoring it, and very difficult to say anything more today. This is a problem the whole industry is facing, so we're definitely not alone with it.
Okay, really great to talk to you this morning. Håkan Samuelsson, the CEO of Volvo Cars, off the back of their results. Thank you so much for making time for Daybreak Europe this morning. Well, we also have earnings from SAP, third quarter earnings of Europe's most valuable software company, missing estimates. So we're going to talk through those numbers coming up next. This is Bloomberg.
Earnings season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
And we bring you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. We are in the thick of earnings season, but let's get you some of our top corporate stories this morning. The Gucci owner Kering reporting third quarter sales that fell less than expected as demand in North America improved. Comparable revenue fell 5% as analysts had been expecting a drop of almost 9%. Kering's ADRs jumped on the results, which come just weeks after Luca De Meo took over as CEO. Elsewhere, Google says that it's made a breakthrough in its quantum computing chip called Willow. The company says it ran an algorithm on the chip that can be repeated on similar platforms, outperforming classical supercomputers. Google says that the advances point to a broad range of potential uses in medicine and materials science too. And shares in Beyond Meat erased gains of as much as 112% to end yesterday's session 1% lower. It's been a dizzying week for the stock, which rose 600% in 3 days, having been swept up in a revival of the meme stock frenzy. The rally, which began on Friday, gathered steam on Monday on reports that a trader was touting the stock on social media. And Wall Street analysts remain sceptical, with 6 sell equivalent recommendations, 5 holds and no buys. Well, those are some of our top corporate stories this morning. Let's just take you through the risk events on the horizon for today. It's quite a busy one. We've got at 1:30 p.m. London time, US state-level jobless claims numbers. Then at 3 p.m. we have Euro area consumer confidence data. And then aftermarket, more earnings coming from Intel and Ford as well. Checking in on your broader markets, at the moment we have futures pointing a touch higher, and I really mean it when I say a touch. We're just flat to the upside when it comes to S&P E-minis and Nasdaq futures, and it's about the same to the other direction when it comes to European futures. So Euro Stoxx 50 futures down 2 basis points, FTSE 100 futures down 5 basis points. We really are treading water this morning in the futures picture, although when you look at the Asian session already, the MSCI Asia Pacific Index down 0.6%. Of course, we're factoring in the tariff story we were discussing earlier with Winnie, the ratcheting up of pressure on China's President Xi Jinping by President Trump ahead of their expected meeting. The US considering these export restrictions that would bar China from buying a swathe of critical software. So you're looking at the MSCI Asia Pacific Index down 0.6% there. And in fact, the CSI 300 is one of the underperformers, but the Nikkei 225 down 1.5% at the moment. Well, coming up on the programme, we'll take a broader look at the markets and taking all the fun out of the games. We're going to speak to the Supercell CEO about proposed EU gaming laws. Next, Candy Crush fans, don't go anywhere. That's next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Oil jumps as the US sanctions Russia's two biggest producers. The Trump administration says Moscow is not serious about ending the war in Ukraine. And Asian stocks fall after a volatile session on Wall Street, and gold extends declines as the momentum trade unwinds further. Plus, Tesla's profit tumbles and SAP's revenue misses. We're going to dive into both next. Well, if you're just joining us, a very good morning. Welcome to the programme. It is 6:30 a.m. here in London, and the futures picture looks like this. Flat on both sides of the Atlantic, though pointing in opposite directions. But if you look at the Asia session that's already happening, the sentiment pretty miserable. The MSCI Pacific Index down 0.6%. We're minding President Trump's trade threats on China, but stocks really weighed down by what's happening in Japan. The Nikkei 225 down 1.5%. Flipping over to the cross-asset picture, and you've got the 10-year yield up a basis point for Treasuries at 3.95 right now. We had a pretty strong 20-year auction yesterday, paving the way for a flatter curve into CPI tomorrow. Of course, it's the first meaningful data point in weeks, so that's how we're looking heading into that. But euro-dollar at a 1.15 handle, weaker 0.1%. Gold, really interesting right now, weaker for a third straight session. So again, we ask, is this rally running out of steam? Is it more about where the floor is now rather than where the ceiling is? 4,356 was the high, and we're getting further and further away from it. Just finally, oil higher after the US, of course, announced those sanctions on Russia's biggest producers, ramping up pressure on Putin to end the war. So you're looking at Brent there up 3.9% at $65 a barrel. But let's turn back to earnings now. Europe's most valuable software company, SAP, reporting third quarter cloud revenue that missed estimates. It's a sign that trade disputes and a weaker economy really are weighing on sales. So we can bring in Matt Bloxham, senior tech analyst for Bloomberg Intelligence, for the details now. Matt, we've talked earlier in the programme about the impact of Trump policy on Tesla's earnings. How much did tariffs and the US government shutdown weigh on SAP in this quarter?
Yeah, I think they're certainly having an impact, but I think we need to put this in context that the miss was less than 1%. And if you look at what they said about the kind of full year, again, they've narrowed the guidance range by about kind of 1% as well. So these are kind of small changes, and actually the kind of outlook for next year in terms of order backlog is still pretty healthy. The backlog's growing at kind of mid 20%. So
I mean, ADR stood about 4% in late trading. Yeah. Do you not expect much of a reaction when it comes to the European Open then?
I mean, maybe we'll see an initial reaction like that, but I wouldn't be surprised if actually, as the results are digested, things calm down a little bit, because, you know, this is a company where, you know, obviously the focus is mainly on the cloud revenue. It's the bulk of their sales. It's been a big strategy pivot. Yes, again, it's this kind of sense that, you know, people are looking for a bit of a beat, and we're getting kind of in line to kind of ever so slight misses. But profitability was actually better than people expected in the guide, and profitability was better than expected too. So I don't think the buy side is going to be particularly concerned about these issues in the near term. Obviously, there's a bigger question about whether things like AI agents over the midterm are going to eat more substantially into these kind of software applications. But, you know, that's kind of for the midterm. And so far, SAP seems to be doing a good job of making that transition.
Well, I'm glad you put the silver lining in the cloud for us there, Matt. I mean, the stock accounted for half the gains on the DAX last year, so really crucial one to watch. But we also, out of France, have STMicro's numbers breaking in this programme earlier this hour. Another company exposed to tariff risks. What stood out to you there? How should we think about that?
Definitely get a similar theme there, that we've got a bit of a miss on the kind of forward guide. Actually, the Q3 numbers themselves were pretty much in line, maybe slightly better than expected. I guess the issue with STM is, like, you know, I think there are definitely kind of bigger, gnarlier issues with chip supply in all sorts of ways, tariffs, rare earths, the China standoff. And when you look at the exposure that STM has both to Apple, we've heard reports that they're scaling back iPhone Air shipments, and also Tesla, which obviously had a big quarter on sales, but that's mainly because the incentives to buy an EV are going away. You know, Tesla's EV share is under pressure globally, question marks about the future of their car business, and so that exposure perhaps probably does raise a few more concerns for investors relative to what we've seen with SAP.
Okay, really great analysis. Bloomberg intelligence analyst Matt Bloxham there. And don't forget, the SAP CFO Dominic Assam is going to be on the opening trade in about an hour's time. That's at 7:40 a.m. London time. Now, let's turn to the world of gaming, staying in tech. The EU is proposing new legislation, which my guest says is crippling the continent's global dominant industry. Ilkka Paananen, co-founder and CEO of Supercell, which is a mobile game developer, the maker of Candy Crush, you might know it, joins me now from Helsinki. Really good to have you on the programme, Ilkka. Thank you so much for making time for us. I mean, like many of the guests on this show, you're proud and passionate about the growth of European tech, but you talk about these potential regulations as something that could threaten the end of progress, at least for gaming. Just tell us more.
Thanks for having me. So first of all, maybe I want to start by saying that it's really important for us and for the industry to give all the players, and especially the young players, a fun and safe experience. That's of utmost importance to us. And so, of course, also we want to protect the consumers. But, the thing is that this proposal actually does not advance us towards that goal. So what this proposal is about, it's about how games should handle what's known as in-game currencies. And it quite frankly, it's a solution looking for a problem. There's actually no evidence that there are any kinds of problem as it relates to how consumers think about in-game currencies. As a practical example, if you look at the kind of research, it says that vast majority of people who spend money on games are adults. Vast majority of the kids who play, they actually do not spend at all. And even out of the kids who do spend money, maybe 95% of those kids actually have parental supervision. And then we see that same thing in the Supercell data. So very small amount, I'm talking about 0.001% of the customer support tickets that we get, they are related to spending in any kind of way, and the vast majority of tickets are related to how a game is being played. So, we just believe that this is a solution looking for a problem, and the concern, and why we are so concerned is that, if this proposal goes through as such, it will completely destroy the user experience. And imagine that you would be browsing a website, and every single time you click a link on a website, you get a cookie consent screen. So that's what we're talking about. And you're talking about tens and tens of screens during an average session of maybe 4 to 5 minutes. So that's the number one concern. And the second concern is that it will cause huge damage to the European gaming industry, which happens to be one of these industries where Europe actually is leading globally.
Well, let's go to point one, Ilkka. You talk about the minority that is the children using these games and paying for them, but it's the regulator's job, isn't it, to protect the most vulnerable in society? Isn't it true that parents wouldn't have as much oversight of in-game currencies as the example of tokens at a theme park? It's harder to control this.
Well, again, if you look at the data, there is no evidence that this would be a problem in the first place. And then, of course, it's also, as I said, it's of course, as an industry and as Supercell, it's very much in our interest to, of course, protect our players and particularly protect the kids. And I think we are doing a very good job at that if you just look at the data. And as I said, for example, pointing to the example that I gave about the customer support tickets, there are no tickets, or very, very, very small fraction of the tickets are related to spending overall.
So if European gaming is a €27 billion industry, what financial difference are these changes going to make, do you expect, if they go ahead?
It would make a massive negative impact, because basically these games would become completely unplayable. As I said, it would literally destroy the user experience. And again, if you don't play games but you probably browse websites, and imagine a website where you get this consent screen every single time you click a link on that site.
And are there not workarounds to this?
Well, I think, again, what I'd love to happen is that, I think the industry should be brought to this discussion, because we all share the same interest. And I think what should happen is that, we and the other leading companies in the industry, we'd love to work with the regulators. And I think where we should start is look at the data and let's look at what let's look at what are the issues, if there are any, and then based on those, what those issues are, then let's figure out solutions together.
Well, what would your solution be to the idea that, you know, these games are designed to be addictive, right? How do you lessen those concerns on player safety about the addictive nature of them?
Well, again, if you want to build a business for the long term, which obviously is like what people want to do, I mean, the only way to do that is to create this very positive experience for your users, for the players, and that's certainly what Supercell tries to do. And again, as I said, I think we've done a very good job on that. And I'd like to think that the vast majority of companies would think that way.
Okay. Well, I'd also like to get your perspective on a question that, of course, has been floating around in markets for a couple of weeks now, if not longer, which is whether AI is a bubble. You're in the thick of the tech industry. The likes of the Bank of England governor are talking about stretched valuations and a correction on the horizon. What do you make of that?
Well, the way I think about AI is that, first of all, it's very clear to me that it's a kind of transformational technology, and we are very excited about it. So it will enable companies like us to create much better experiences and products for our customers. But having said that, we've seen this before, right? So every time there's this new kind of transformational technology, people get very excited about it, and then also lots of capital starts to flow to that industry, and that's of course exactly what we are seeing right now. But as usual, there will be winners and losers in this, and there's no question that there's some signs of of a bubble right now, and yes, some companies probably are overvalued, but at the same time, as we saw with the emergence of the internet, massively valuable companies were born out of that era, and the winners will be incredibly valuable. So I think it's going to be overall, it's going to be a massive net positive. And then, of course, the question and the challenge, I think, for, say, investors is that, okay, who will those winners be? And that's very difficult to say, even at the pace at which things are moving. And my personal belief is that some of the winners will be these AI-based startups, but then also some will be incumbents who can leverage AI to make their services and products better.
Just finally, briefly, Ilkka, will some of the losers be Supercell staff potentially losing their jobs to AI?
Absolutely not. We've actually been recruiting more people. Last year we recruited more people than they ever had, and the same is going to continue this year and also very likely next year. So the way we think about AI, that it will give our developers superpowers, and it will enable our small teams to do even better games for our players. So we don't see that as a kind of cost-cutting exercise of any kind. It just will simply enable us to do better work, better experiences for our players.
Well, we'll hold you to that in the future. Ilkka, Paananen, thank you so much for making time for us. No job losses to AI, you say. We'll keep that in mind. The co-founder and CEO of Supercell out of Helsinki. Really good to talk to you this morning. Well, we're going to continue the conversation about the winners and losers in the AI race, but we'll focus on Africa next, where that race is also taking place. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Chinese firms, including Huawei and Alibaba, are courting Africa's startups with innovation hubs with open source AI models. Huawei is promoting DeepSeek as a cheaper alternative to Western AI models like OpenAI. And Shiko Gitao, CEO of Kuala, a Kenyan firm that's adopted DeepSeek in its AI development, says that it's more suitable for their market, and Western providers are just trying to catch up.
When it comes to just cost of access and the way they build DeepSeek that you can run on very simple machines, you don't have to have extremely expensive machines, makes it a bit easier and accessible for most people. Yeah.
Do you see Silicon Valley models, though, potentially changing in order to optimize and be better suited for emerging markets?
I was hoping you're going to ask me this question, because DeepSeek was launched earlier this year in January. And I mean, doing some of the work you were doing last year was very, very expensive. And coming this year, you can see OpenAI, Llama, even Gemini are launching an edge version of their model, a low parameter version of their model that you can train with low compute, which makes it easier. Number two, it has incentivized like the frontier model providers to say, how do we support the emerging Africa and other, and I'm thinking about India and Latin America in building on top of this. And there's a lot of provision of like better compute credit to help you get into your first MVP. So I'm seeing DeepSeek did us all a favor by doing this, because it enabled other people to see us as viable market, which is what I love about this whole competition.
So that was Chico Gitau, who is CEO of Koala, speaking to Bloomberg's Jennifer Zabasajja. And we can get more on this story with Bloomberg's senior Africa reporter, Loni Prinsloo. She's with us in London. Loni, welcome to the set.
Thank you.
I do wonder why the rivals to OpenAI out of China, like DeepSeek, are so popular. We heard a bit of the view from Chico there, but how would you put it?
So basically, DeepSeek is a lot cheaper when it comes to startup founders. We spoke to the one Nigerian startup founder, and he has an e-learning platform, and said for him to train that platform costs him about $2,700 a month, compared to if you do use OpenAI equivalent, it's about $12,500 a month. So that's a big difference for a startup founder in Africa.
Yeah.
And it's open source. You can adapt it to your models. So yeah, it just makes sense for some people.
So cost a big factor, but this reminds me of the Belt and Road Initiative, right? Isn't there a danger that you're going to have customers very reliant on Chinese suppliers, and even if the offering's cheap up front, they might be painfully reliant on them later down the line?
So China has been investing in Africa for a long time when it comes to tech. The past 20 years, quite heavily investing in Africa. Huawei's equipment is now 5G, fiber. So yes, you do then become quite reliant on it. We saw a bit of that with the Chinese entry exams that they have every year. They cut access to the AI models, and we felt it in Nigeria, in Kenya, as our biometrics system didn't work all of a sudden. You know, the things that are trained on these AI models. So yes, you do become reliant, and you feel it.
And are there safeguards in place to stop all this sensitive data winding up in Beijing?
So DeepSeek tells us, you know, if we are storing data in China, which they do, according to Chinese privacy laws, they can access it. And they tell us that. So that's the risk you take. Africans are not necessarily pro-Western models, or, you know, they're not too concerned in terms of whether they fall on the Eastern or Western side of this debate.
Really? Because, you know, the tech titans of Silicon Valley are so close to President Trump. I witnessed it when I was covering his state visit to the UK. They were literally round the table, right, with him and with the king. Is there not a risk that Africa ends up on the Chinese side in the middle of the trade war between Beijing and Washington?
You can, of course, end up in the middle of this trade war, and there's tariffs coming out every week, and you have to renegotiate these tariffs. But I think in the end, it's going to fall on what makes sense for Africans. You know, what will make sense for a founder, if you're a sort of founder, to learn, to teach your model, train your model. All these AI models need sort of to be trained, and everything in 50 years is going to be African. It's the fastest growing population in the world. It's the youngest population in the world. So sports, entertainment, AI models that need to get trained, it's all going to be African in 50 years.
Well, I understand the case for Chinese offerings like DeepSeek cheaper, for one.
Yes.
Is there a push factor, though, from American offerings like OpenAI, then, that makes them less suitable to that young audience in Africa?
So we have seen OpenAI also sort of announcing that they will be looking at open source models as well. So I think everyone is going to try and see how they adapt their models. For now, when it comes to startups specifically, we are not talking about the larger companies that have contracts in place with OpenAI and so on. But for startups specifically, we are seeing the popularity, the surge, the edge, competitive edge, more leaning towards a DeepSeek at the moment.
All right, well, that battle for Africa continues. Really great to have you with us here in London this week. Bloomberg Senior Africa reporter Lodi Prinsloo. Good to see you. We've got plenty more coming up on the programme, so don't go anywhere. This is Bloomberg.
Credit spreads are still almost record lows. So people are still partying. If the punch bowl is being taken away, only a couple people may have noticed it yet. But so far, it's still partying like it's 1999 in the credit markets for the most part.
So that was the famous short seller Jim Chanos speaking to Bloomberg. Who needs the punch bowl? The party continues. But he's talking about credit. Take a look at what's happening in the momentum trades. We've put here gold, Bitcoin and unprofitable tech. But look at the dips that we've been seeing in recent days. Flip the board over and we can dive into what's been happening in gold, because you can see just how sizable the drawdowns have been recently. Of course, gold been on an absolute tear over recent weeks. But take a look at the drawdowns for ETF holdings, I should add, that have been happening recently. And also, just while we're setting you up for the day with your term charts, want to turn to what's been happening in the UK, because of course we had UK CPI yesterday. And if you flip the board, this is what happened in gilts yesterday off the back, retracing, dropping about 20 basis points over the past 2 weeks. But of course, there's been two consequences off this CPI. One is for the Bank of England. Looks like we could see a rate cut before the end of the year. That's about 70% price now. But this gilts move really speaking to the Chancellor Rachel Reeves's position. The Office for Budget Responsibility, the fiscal watchdog, hasn't made its forecast yet. And that, of course, is going to be crucial for her headroom. And that, of course, is going to be crucial for how painful her decisions are going to be when it comes to tax rises and spending cuts. Maybe this drop in gilt yields is going to help Rachel Reeves out when it comes to November the 26th. Those are some of your term charts. You can find them all on your terminal. But do stay with us right here on Bloomberg TV, because today and tomorrow we're going to bring you live coverage from the Berlin Global Dialogue, uniting leaders from business, politics, academia, all the people who really shape the global economy in the 21st century. So you don't want to miss those interviews. We've got plenty of them coming. But up next, we're going to take you all the way to the start of the European cash trade. Anna, Critty and Guy will be with you on the opening trade. That's next. This is Bloomberg.